Hello and welcome to another Amati Insights call, where we give you an update on some of the interesting areas that we're investing in on the portfolios. And today we're going to be talking about defence, following my recent visit to the DSEI large London defence show. But before we get started, just a quick disclaimer, as you can see on your screen. This is also available on the website, and it's just to note that all of today's content is really not designed to constitute investment advice. Everyone's circumstances are different, and it's really important to do your own research. And if necessary, do seek professional guidance. So that said, on to our topic of the day, which is defence. And I'm joined today by Gregor Paterson, one of the co-PMs from the UK Small Companies Fund. Hi, Gregor.
Hi there.
And would it be useful maybe if you could just set the scene to start with, kind of the defence spending outlook and how it's changed over recent years?
Sure. Well, I mean, to set the scene, Europeans have been the beneficiaries of this huge peace dividend since the fall of the Berlin Wall in 1989. And that's allowed European economies to cut spending on defence in favour of all sorts of other things, because the security threats weren't there, and also because the US stepped up as the sort of protector of all Western democracies, maybe in exchange for some power and influence across those regions. And really that's over, and that's over for two reasons. Firstly, we have a conflict on mainland Europe, which has been ongoing since 2022. And at the same time, the US have stood back a little and said to the Europeans, it's up to us to organise our own defence infrastructure. And that means addressing, decades of underinvestment. This is not a sort of quick fix. And what I think is really interesting in stock market terms is that share prices still don't really reflect the magnitude of the correction or the catch up they've got to do. So if I can give you one or two examples from the UK Smaller Companies Fund, if I may. Kinetic is a defence, security, cyber technology company. It was actually spun out of the UK government in 2001 and listed in 2006, and is now a FTSE 250 constituent. And Kinetic's 10-year average PE ratio is about 15 times, and at the moment it's on 16 times. So it hasn't really reacted to this change in the backdrop. The Kinetic would be a almost impossible company to recreate in terms of the technology, and also in terms of the relationships that it has with governments in the UK and Australia and in the US. Similarly, Chemring is another FTSE 250 constituent. They make countermeasures and energetics, which is rocket fuel and launch technology. Again, a business with huge barriers to entry, a £1 billion order book, and the growth for Kinetic for Chemring is funded in part by grants from the EU and Norwegian government, which is helping them to build the factories and make the investment which will allow us to have our own kind of European supply chain. And I think that was one of the companies that you met at the conference and attracted interest from global investors as well.
Absolutely, yeah. I think you're right. It's a really interesting business and does look very undervalued here. I mean, again, not investment advice, but from our perspective, we're looking at a situation where Europe really needs to reindustrialize its capacity to build weapons. And as you say, barriers to entry. I mean, barriers to entry for a company that creates rocket energetic equipment, which is obviously highly explosive, is just incredibly difficult. So they have this fantastic market position on that side of the business. But also one of the things that really attracted us to it is there are a few areas or specific sort of innovation areas in defence that we're really focused on at the moment. And one of them is electronic warfare. And Chemring have a great position through their Roke business in sort of man-portable, particularly electronic warfare products like their Resolve and their Deceive products. So as well as other things like sort of biological agent detectors. So yeah, we think it's really interesting as well, and which is why we're now also holders.
The last one that I wanted to flag was a UK company called Cohort, which is listed on AIM. The market cap's about 650 million pounds. It's a very acquisitive security and defence business, and it's now 7 separate businesses, having recently acquired its first Australian business, which focuses on satellite comms mainly for naval defence customers. And Cohort's another example. Its businesses are well established. They're all crucial to the European and Australian and New Zealand defence infrastructure, and yet it trades on about 22 times earnings. Now, we want to get that in context. There's a chart on screen now that's been put together by our friends at Agency Partners, and it shows how some of the large cap German names have started to move in anticipation of the investment that's coming into the sector. And down near the bottom, you can see the pink line is Chemring, the company that we've been talking about, and you can see how that has eked out a fairly modest move compared to some of its larger peers. And I suppose that picture paints 1,000 words, and that's where we feel that the opportunity still exists within the UK market.
Yeah, definitely, I agree. It looks it's quite stark on that chart, isn't it? I mean, obviously, a lot of the countries, or if you think the sort of larger countries that are a bit closer to the action, like Poland and Germany, have really been some of the first to ramp up spending. Germany, obviously, with very significant changes even to the way that they think about debt as a country. There's some very sort of structural changes going on in Germany. And Rheinmetall there, which was the black line, the big black line that went up the fastest, has been a huge beneficiary of this. The UK is talking the right talk, but at the moment, there are lots of issues with raising the capital, and so we think it will happen, and obviously defence spending remains very important. So lots of opportunities. What really interested us, particularly after my visit to the defence show, there are a number of areas. We've been investing in defence on the portfolio since we launched it, but there are a couple of kind of specific areas of innovation that we really think are the most interesting, and that's because defence spending is kind of moving in their direction. And those are things like, as we mentioned earlier, electronic warfare, cybersecurity, UAS or drones and counter-drone, and then space, which is again a lot of money being devoted to. The reason those things are interesting, we think, is because the nature of warfare is changing. We have seen from the battlefield in Ukraine that when they started the war, they had these very large kind of radar installations and big weapons installations that were very quickly taken out. And so it's become a realization that rather than having these large, so-called exquisite kind of defense capabilities, it's better to have lots of much smaller items that provide the same overall task, if you like, but are much more agile and have a lot more redundancy built in. So if you think about satellites, rather than having 1 or 2 very large satellites, better to have hundreds of low Earth orbit satellites. Whereas even if half of them get destroyed, you still get the same kind of service from the satellites. And so that whole thing about going to cheaper and smaller, we're seeing that everywhere across defense. Think about drones. We're replacing historically very expensive manned fighter jets with lots and lots of very cheap drones. And likewise, shooting them down, instead of using very expensive surface-to-air missiles, increasingly they're being shot down by a guy in the back of a turboprop with a rifle, or perhaps other drones that can be sent against incoming drones. And likewise, this is a really important area for electronic warfare, just for jamming capabilities. So it's about watching kind of where the money is going and why it's going that way. That's I guess kind of focusing our investment approach to defense. And there are some of the companies that we are invested in really do play to these areas. So companies like L3Harris, which does have actually an energetics type of business, a bit like Chemring, called Aerojet Rocketdyne, that does equally, powers rockets, missiles, and space rockets. But they also do a lot of very complex electronics for command and control in the battlefield, software-defined radio, that kind of thing. Equally, we have a company called Moog, which does it provides actuators and quite complicated things called slip rings that go into lots of different defense equipment. So actuators, control the control surfaces of missiles or aircraft. And obviously there's a huge amount of spending going into those. But what's really interesting, I think, when you get into it, is that how a lot of this innovation in defense then translates to that innovation becoming in the commercial markets outside of defense. And certainly Moog, the company I just mentioned that does the actuators, they're seeing a lot of their sensors and actuators being taken up for usage in areas like robotics and increasingly humanoid robotics. So whole new growth avenues for them that they're kind of benefiting from the initial defense spending, if you like, and taking that out into the real market. I guess there are probably lots of other examples of that. I imagine some of the UK companies as well.
Yeah, no, absolutely. I mean, Chemring that we've touched on. I mean, a lot of their technology is very relevant to the space sector, which is emerging very quickly. And Kinetic have been involved in cybersecurity, which is affecting us more and more. Again, for a long, long time. So yeah, a lot of these technologies that are coming out of the defense sector are really helping in other areas of our lives.
Yeah, it's sad that that this has become an important area for investment, and obviously that doesn't go unrealized. But it's ultimately we are where we are, and as investors, we're looking to take advantage of what is ultimately a very significant area of investment for the world. But with that, thanks, Gregor, for today, and thanks everyone for listening. And we'll see you in a couple of weeks' time.
Thank you.